Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, and we are in for a treat today. We actually have Mr. Greg Dickerson for a fourth interview. How you doing, buddy?
Doing great, Michael. Good to see you.
Thank you for this. This is a great treat for my channel, and this is really probably all of them have been great today, but this is an important topic. You called the great deleverage about 6 weeks ago. We followed up a couple of times. I think we both think it is coming, and frankly, has to come. But I'm curious, where might the audience kind of see opportunities percolate? Because we hear great deleverage, we think opportunities, but I don't know that everybody's ready to look for them. Where do you see opportunities kind of popping off in the near term or midterm?
It'll be across the board. So, that's just going to be a pricing reset. So the market, pricing is going to get reset. We're 30-40% frothy right now. So when that, unwinds and we get the deleveraging in the market, you're going to have some buying opportunities. The key is you got to watch the right sectors, because certain sectors are still way overvalued and some have, taken a bigger hit than others. So you have to really be careful about what you're going to invest in stocks versus growth versus, future and, technicals and all those types of things. I'm not a big stock market guy, but, you just need to make sure and understand, that like a lot of sectors of the stock market have been carried by 4 or 5 companies. That's where the bulk of the growth has come from. So a lot of them are unwinding. Other ones are unwinding less, so you just need to be careful there. But there's going to be value, in the markets once it recedes. Interest rates go up. That's going to affect and impact the real estate market. So there'll be more opportunities. We'll see inventory levels climb. I know there's a lot of demand right now, but it's very, unbalanced because there's so little inventory out there. As soon as interest rates change, that's going to change. There'll be less demand for people buying. We're already seeing people pull out, so that's going to create opportunities in real estate. You're going to say something?
I was going to tell you about real estate. I had one of my real estate agents on yesterday for the market that I look at. So this is Fresno. It's 1 million people, right? I'm not saying this is the nation, but this was Fresno. I asked him, what was active listings December of 2019. So this was before the pandemic. Active listings, Fresno County, so about 1 million people. I think it was 2457. All right. So cool, right? You don't have any numbers. You don't know if that's good or bad. Guess how many listings yesterday, December 26th, active listings? Just take one guess.
2557.
487.
From 2,400 down to 400.
We are 80% off. And again, nobody has context. I've looked at my market every day, so I know the market, generally speaking, is about 18 to 2,200. That's about what I've seen for 20 years. So to know that we have 400, let's call it 500. Let's round up 500 active listings today. There's no supply. I mean, it's like supply could double and we'd still be under available. That's real estate market's crazy.
Yeah, it's really interesting. So you have a lot of things going on right now. You have the holidays. So a lot of people pull their houses off the market or don't list for the holidays. Less and less people are having to move now, because of COVID and remote work and things like that. So, we're still in unique times, but I've seen in our area the same kind of thing. I mean, in our general area, it's a much smaller MSA. Usually there'd be 600 to 700 single family homes on the market at any given time. And, we've seen that drop over the last couple of years, but this year, right now there's probably 100. So, just 1/5 of what it normally is right now in terms of inventory levels.
Yeah, exactly. 1/5.
Again, very unique. And we're starting to see reports and, all kinds of different areas that, buyers are stepping back, especially new construction. Builders are starting to see, less demand in some areas, not all, just because prices are so high and delivery times are so, sketched out that they can't promise anything for any period of time at any price. So that's starting to, see pushback. But again, that will create opportunities down the road when it changes, because it will change. It always has, it always does. We will reach, a point where we're oversupplied in real estate again. It always happens. We get undersupplied, then you build, and then you get oversupplied. Problem is we can't build right now because, COVID. We don't have enough people,
people, supplies. They're actually counting dead days. I didn't even know what a dead day was. But hey, we don't have windows. We can't put them in. I was like, oh, that's a dead day. Oh my gosh.
Yeah. It's very tricky right now. And, all across the board with all kinds of different things, and then the third area where there's going to be a lot of opportunity in a deleveraging environment is, business, as other areas consolidate, it creates opportunity in new areas. And, in terms of, taking over businesses, buying new businesses, starting a new business, things like that.
Yeah, I think there's a lot to talk about here. Again, is it fair to say that, well, at least this is what I believe in, and if I'm wrong, please tell me. I think the stock market, you will see the deleverage first. Real estate just moves slower, right? It'll happen. It just moves at a slower rate. Is that a fair thing to say, or am I?
Yeah, yeah. Again, the real estate market, see, yeah, stock market's instant. I mean, as soon, you'll see that start to happen instantly. It already has. It's obviously the most liquid market in the world, and the most liquid type of assets. Real estate is, less liquid. But if you see two things happen, interest rates go up, and if you see liquidity, which is they're buying mortgage-backed securities, and that stops, that's less liquidity going out, meaning less money for lenders to lend. And when there's less money available to borrow to buy real estate and it becomes more expensive, that instantly changes the market overnight. We saw it happen in 2008 and 9. It changed overnight.
Yeah, no. Yeah. Again, the thing in the real estate market that I watch, and I talk to lenders and agents all the time, is for me, it is first, it is active listings. Because again, if a normal market's 2,400 and we're at 500, you're not going to get a crash with that ratio. It will be it'll take months just to get back to somewhere close, right? So I'm watching active listings. I think it does trend up next year. I think every month has more because this thing's going to get behind us. It's going to become endemic and people are going to start living their lives again. But that's slow. It's quarters in the making. I think the stock market, like you said, rates go up, it changes the value calculation and suddenly risk assets are off and value is on and all of those things. But I loved your last point. I did not think about, this is why you're an entrepreneur and I'm not, buying businesses. There's a lot of businesses that maybe the owner is, getting up and they've gotten through the last 2 years and they're just tired. Maybe there's some businesses that took on too much debt. I think you're right. I think there's going to be a lot of opportunities the next year or so to pick up existing businesses as opposed to starting new ones. Is that a fair assumption?
Yeah, absolutely. And there's both, because there's a lot of vacant space still, in different sectors. And then there's a lot of businesses for sale, just people, cycling through, struggling, don't understand marketing, whatever, can't remain competitive. You can do consolidation plays where you buy and roll up similar type businesses. And the funding for that is cheap and available right now. To take over businesses, buy businesses, you can combine an SBA loan with, creative financing. You can use just creative financing. You can use vendor financing. So there's a lot of different ways that you can, buy or take over a business. I have a course on that as well, on how to, start or buy an existing business and how to do it, creatively. So you don't have to use any money. So there's a lot of different ways to do that. But like SBA loans are extremely inexpensive right now to get, and, for whether you're buying one or starting one from scratch. And yeah, I mean, it's a great time right now, but as soon as that liquidity drives up and interest rates change, it becomes more and more difficult. So
yeah,
that's where the creative financing comes in. As things get more expensive, inventory levels rise, everybody wants out. That's when you get creative and you can make some really good deals.
Oh, absolutely. I think, again, I think a recession or at least a slowing of a business cycle is on the horizon. And that's where the best deals are made, right? You have a motivated seller, you have really few buyers. So you have time and you can work out a deal that works for both of you. I totally agree. Greg, where can people find your amazing courses?
Yeah. GregDickerson.com. Everything's there. YouTube channel, podcast, my courses. They're all there. They're cheap. They're good. People love them. It's really cool.
Yeah. They're under $100 is what I've heard.
Yeah. I did that for a reason. That basically covers the cost of the technology and, stuff to keep them maintained and, keep them out there and promote them. But, they're based on everything I know and everything I've learned over my 30 years as an entrepreneur, real estate investor and developer, and, multiple businesses. And then I'm coaching people all around the world. Yeah. And a lot of that content and information is based on what they're doing in all kinds of different businesses and real estate investments all around the world. So it's really cool.
Yeah. Do yourself a favor, folks, check them out. Maybe add that to your New Year's resolution list or plan, New Year's plan to move forward. So Greg, thank you very much.